Good morning, everyone. You are watching a live daily market outlook from Windsor Brokers for Wednesday, 8th of May 2013. A lot of action seen during the Asian session with the top releases, Chinese trade data that came at a bit levels, and intervention of Central Bank of New Zealand in order to weaken the currency that is in steady uptrend since 2011. As such, Chinese data came out, trading balance came out in the much better than expected levels, while exports and imports also grew more than expected in April. From a year earlier, helped to improve the outlook of Chinese data. Basically, this was the top release for today, and it was awaited with the Aussie dollar benefiting mainly out of the Chinese data, as China is the Australia's number one market. From the other side, the Central Bank of New Zealand intervened, as said, with the Kiwi dollar being significantly lower against the US dollar and the Aussie dollar this morning. With the Aussie dollar being in this near-term recovery corrective mode, still holding below 102 level. A slight risk on seen after Chinese data pushed the single currency higher, but brief trip above 131 handle was for now short-lived, and basically the euro dollar remains within the range, and shows no direction in past few days or weeks, if we want to be more precise, while dollar yen remains under pressure following a rejection at 99.44, with the price still holding below 99 handle, and still seeing increased risk towards the downside. From the other side, the commodities crude oil holds positive tone, still slightly neutral currently on the hourly, following the consolidation above 94.85 low, but more focus is still seen towards the upside, as 4-hour indicators hold a positive tone, and sees potential for extension of the larger recovery from 85 and 90 low. Gold again recovered its recent losses that bottomed yesterday at 1440, retested the previous low with the quick reversal higher, hitting as high at 1458. Still the near-term tone is slightly skewed towards the downside, following a descend and break below the bull trend line and extension to test 1440. Now, in the case of further extension higher, we need to see a gain of 1470, 1479 in order to avert immediate downside risk. Otherwise, more pressure will be seen towards the downside, and of course more of this will be seen in our technical part that will come shortly. Just to take a quick look at the today's calendar, as said, Chinese trade balance for April came at showed 18.2 billion yuan surplus, compared to draw the negative, the trading gap of 900 million seen in the month of March. Today's forecast was 15.5 billion, and the release beat the forecast. CPI from Switzerland is already released. 0.1% was the forecast for today, compared to 0.2% monthly inflation seen in the month of March, while no change seen in the April 0.0. Still to come is one of the key releases for today's German industrial production for March, due at 10 o'clock GMT. Decrease and the contraction of is seen according to today's forecast, that is seen at -0.1%, compared to positive one in February of 0.5%. And a few releases from Americas and New Zealand will conclude today's trading, as the calendar is quite light for today. However, the Canadian housing starts for April is due at 12:15 GMT, 175,000 new housing starts seen in as a forecast, compared to 184,000 in month of March. US crude oil inventories due at regular time at 14:30 GMT. 1.8 million barrels build is seen in the past week compared to quite high one of the previous week of 6.7 million barrels. As we said in our yesterday's session, reduced demand for the energies seen in the United States due to the current crisis that persists sees from the fundamental side some pressure on the oil price as the crude oil inventories data show that stocks are continuing to build up. And finally, from New Zealand, late in the afternoon, unemployment rate is expected to drop according to the forecast to 6.8% compared to 6.9% in the fourth quarter of 2012, while employment change in first quarter is showing improvement according to the forecast of 1.1% compared to -1% seen in the fourth quarter of 2012. And that's all from economic indicators for today. As said, focus is on German industrial production due at 10 o'clock GMT, and then quite interesting is the crude oil stocks that will be affecting mainly the oil price. And now we're going to take a look at our technicals for today and see what are the expectations for the major currencies and the commodities for today. As said, the euro remains within the range, and we can see on the hourly chart even the narrower range is still defined on the downside by approximately 130.30, on the upside 131.60. The pair is trading in a triangular consolidation narrowing range with this morning's slight bounce higher on increased risk appetite, being limited at the trend line resistance and triangle resistance at 131.20. This was the initial resistance ahead of 131.30. This is the high of yesterday, and this also marks 50% retracement of the down leg from 132.41 to 130.32, keeping the upside limited for now. Slight improvement is seen on the hourly chart. However, it seems that the price failing to sustain gains above 131 and returning back to this level now sees again more pressure towards the downside. At this point on the hourly chart, we can say that the break of either side of this triangle will give us near-term direction as we have 131 approximately 20 on the upside and 130.75 on the downside, with the near-term base also seen at 130.60 along with the supports at 130.52 and 130.32, keeping offering a good support for now, break of which is set to open a way for a possible further easing down towards 130.00 psychological support, and then we have the a larger range floor at 129.53. This is the low of 24th of April 2013. As said, hourly structure has improved slightly, but it seems that gains are losing traction, while 4-hour indicators are still negative despite the recent bounce that broke above the moving averages. If the pair manages to hold above 131, then we might see some further corrective action that would be looking for a test of 130.20 is the recent high, and the triangle resistance 130.35 approximately is a 50% retracement, and then 131.58 high of 3rd of May and the 61.8% Fibonacci retracement, break of which is to shift focus again towards the upper boundaries of the range at 132 and 132.41. British pound was among the top losers yesterday following news that a big UK name was a seller of the sterling. This was the sharp move seen in at the beginning of US session, as the price lost initial and psychological 155 support and dipped as low as 155 at 45, where the temporary support was found. This also marks Fibonacci 38.2% retracement of the latest upleg from 151.95 to 156.03. And more focus is still seen towards the downside as 4-hour indicators slid into negative territory, and the current recovery being capped by 55 days moving average of the 4-hour chart, while the descending 20 days one is now maintaining the pressure towards the downside. Loss of 154.45. Yesterday's low is to introduce a strong and pivotal support at 154 zone, where we have 154.10 previous high of 11th of April, and 154 50% Fibonacci retracement of the upleg from 151.95 to 156.03, a break of which would more significantly weaken the structure and confirm the top at 156.03. Hourly structure is still in the negative, and sees more potential towards the downside, while daily indicators are holding a positive tone, and I would say as long as we hold above 153.15, where is currently a main bull trend line drawn of 148.30 low, the upside will still remain in focus. Of course, break above recent peaks at 156 zone that also marks 50% retracement of larger 163.80 to 148.30 descent, would signal resumption of the bull trend from 148.30 low of 12th of March 2013. Dollar yen remains at the back foot during the Asian and beginning of European session, following upside rejection at 99.44 and on Monday, with the lower tops left at 99.34 and 99.14. This was the overnight's one, as yesterday's dips reached 98.63 so far, keeping again downside risk for possible further retracement of strong 97.00, 99.44 rally. Immediate support below 98.63 stands at 98.51, which is 38.2% Fibonacci retracement, and the break here basically will increase the downside risk and put near-term bulls on hold, while push above 99 as initial resistance, and then a regain of 99.14, 99.34 is required to shift focus again higher towards 99.74, 99.87, and 99.93. Of course, psychological 100%, 100 yen, resistance will come in the near-term focus. 4-hour indicators are still in the positive territory, though losing traction as all of them are heading south, and this is increasing risk of break lower, with the set strong support standing at 98.51, 38.2% retracement, and reinforced by 55 days moving average of the 4-hour chart, break of which will be again weakening point for the pair, and would again delay the final push towards 99, 87, 93, and the 100 barrier. The Aussie dollar recovered some ground on the bounce of recent lows seen yesterday and this morning at 101.54. Basing attempt is evident now here, as the price breaks attempts now at 102 initial resistance, previous psychological support, and of course more significant is 102.20 previous base, break of which will give us some more space and allow for a stronger recovery. The resistance is also reinforced by 55 days exponential moving average of hourly chart that now moves sideways, that signals possible further extension higher, as the price already broke above the 20 days one. Now from Fibonacci levels, the recent down leg from 103.21 to 101.54 sees again 102.20 reinforced by 38.2% retracement, and basically lift above 102.20 is seen as a trigger for some a more significant correction, though still this is still seen just as a correction, as the larger picture downtrend remains firmly in play, and the trend line resistance at 103.00 along with the previous high at 103.21 are seen as key barriers at this point, break of which is to confirm the base at 101.54 and allow for some more significant recovery. Otherwise, a more likely scenario would be lower top and the fresh extension lower, as the recent low of 4th of March 2013, and the bottom and the floor of multi-month range at 101.14 is now in the near-term focus. With the current bounce still could be described as a corrective, as long as we are holding below 103, 103. 21 as said, break above the later is set to provide some relief and allow for stronger corrective action. And finally, from the commodities, as said at the beginning, the crude oil is in the corrective consolidative mode following a pullback from the recent peak at 97.12, with the dips being contained by 55 days exponential moving average and held above 94.43 Fibonacci 38.2% retracement level. Sideways mode and neutral tone seen on the hourly chart, though the risk is skewed towards the downside as basically the price broke below the channel support, though the downside remains so far protected. The main risk will be seen on a break below the low at 94.84 and the Fibonacci level at 94.43. That would allow stronger recovery, for stronger pullback. From the 4-hour chart, indicators are well positioned at this point, and heading higher. Some loss of momentum was registered on the pullback from 97.12 high, but so far as we can see, the 20 days exponential moving average maintains the gains and keeps the downside protected for now, and holding above recent lows at 94.84, 94.91 keeps again focus at the upside. 97.12 is seen as initial resistance ahead of more significant previous peak of 1st of April at 97.68, break of which will will confirm the full retracement of the down leg from 97.68 to 90.85.90, and will open another good barrier at 98.63, peak of 13th of February 2013. Overall positive tone persists on the larger time frame and sees more focus towards the upside, with downside so far being well protected. From the other side, gold remains fragile despite the bounce of yesterday's low at 1441 that tested previous low at 1440 for low of 1st of May, 1 week low, as the price bounced up towards to 1458. Basically, it cracked our previous support at 1555, but still lacking strength and momentum according to the hourly indicators for some stronger recovery, as the descending 55 days moving average currently at 1459 so far limits the upside and sees again increased risk towards the downside for possible test and break below the pivotal and break point at 1440, where we also have the previous high at 1438. This is the high of we lost it. 1438, the high of 22nd of April 2013. Sideways movements are seen on the 4-hour chart, though the tone is slightly skewed towards the downside following yesterday's fresh weakness and test of the near-term range floor at 1440. In case of break below 1440, 1438, then we'll have confirmation of the double top at 1485.87, and the most likely scenario would be fresh weakness down towards 1424. That marks 38. Down towards 1420, where we have the next support. My apologies for a second. 1424, 38.2% retracement of the entire recovery rally from 1321 to 1487, and then 1404 previous higher base, and the 50% retracement seen as a very strong support, the break of which again to open way down towards 1321. Low of 16th of April 2013. Conversely, any break above 1470, 1479 will shift focus again towards recent peaks, 1485 and 1487, the later also marking a 61.8% Fibonacci retracement of the fall from 1590 to 1321. On the daily chart, the structure remains negative. The indicators are still in the negative territory, and as long as we are holding below 1487, 1500 barriers, more focus, more risk is still seen towards the downside. And this is all from me for today. I would like to thank you for being with us, and just a reminder for tomorrow's session that starts at our regular time at 7 o'clock GMT, 10 o'clock local Cyprus time. Until then, I wish you a nice day and, of course, successful and profitable trading. Good luck.